Digging into a market update you shared from today, May 19th, 2025.
That's right.
And the mission really is to try and make sense of all these, well, seemingly separate bits of global economic news. What does it all mean for the bigger picture and potentially for you?
Exactly. It's about connecting the dots. We've got, China's latest economic numbers, then there's the EU taking new steps against Russia's oil tankers.
Okay.
Plus, commentary from the U.S. Federal Reserve, the usual suspects like oil prices and inflation, and then some interesting stuff on trade and even Boeing.
Right. Quite a mix. Let's start with China then. The April data showed industrial output was, well, better than expected.
Yeah, up 6.1% year over year. They expected maybe 5.7%. So factories seem busy.
Oh, there's always a but, isn't there?
Well, yes. Retail sales, on the other hand, they kind of fell short, only 5.1%. So you see this divergence.
So production's strong, but maybe people inside China aren't buying as much? What does that imply?
It could signal, some potential headwinds for U.S. companies that sell a lot of consumer goods over there.
Ah, okay.
And maybe even chip manufacturers, given how much goes into products sold in China. It's that interconnectedness, really. Shows how one country's consumer mood can ripple outwards.
Interesting. That production versus consumption tension. Okay, let's hop over to Europe. The EU is sanctioning more Russian oil tankers, about 180 of them.
Correct. The clear aim is to tighten the screws further on Russian crude oil exports, make it harder for them to get it to market.
And the market reaction? Predictable.
Well, energy traders are certainly expecting it. They're predicting a likely uptick in Brent crude oil prices and probably European gas prices, too,
right,
when the markets open up again on Monday.
Right, so that could mean higher energy bills potentially for consumers.
It often translates that way, yes.
Okay. Meanwhile, back in the U.S., the Federal Reserve, still the big question. Interest rates, anything new?
Well, Fed Vice Chair Jefferson is actually scheduled to speak today, so that'll be worth listening to. But recently, we've heard from some regional Fed presidents, and the general tone suggests they're not ruling out more rate hikes.
Still, even now.
Yeah, if core inflation, taking out food and energy doesn't show signs of really cooling down, that seems to be the condition.
Okay, and treasuries are reacting slightly.
A little bit, yeah. Treasury futures dipped slightly, which pushed the 10-year yield up a bit. It's nudging towards 4.35%. And that yield, of course, influences borrowing costs more broadly.
So the possibility of rates going higher is still sort of hanging in the air if inflation stays stubborn.
Exactly.
Now, speaking of things influencing inflation, oil. OPEC Plus increased production a little bit since April, didn't they?
They did, modestly, around 0.4 million barrels per day. That should, in theory, ease supply concerns a bit.
But prices are still pretty high. Brent's near 82 $. Why?
Well, you've got a couple of counteracting forces. First, ongoing tensions, geopolitical stuff in the Gulf region. That always adds a risk premium. And second, these new EU sanctions on the tankers we just talked about, that adds another layer of potential disruption, or at least perceived disruption, to supply. So it's keeping prices elevated despite that OPEC Plus increase.
And the knock-on effect is inflation again.
It certainly could be. Higher oil prices, as we know, could filter through. Think airlines, logistics companies, even chemicals. They face higher costs. And often that gets passed on down the line to consumer prices eventually.
It's that persistent link. Okay, let's touch on global trade briefly. Treasury Secretary Bessent is at the G7 finance talks.
Yes, and there was mention of trade imbalances still being a focus, and the possibility of new tariffs described as, quote, very fair, isn't off the table.
Very fair tariffs. So more uncertainty.
Yeah, it just adds to the ongoing uncertainty, especially for industries like automotive and retail that rely heavily on global supply chains. They don't like tariff talk.
Understood. Okay, one last piece. Boeing. News that the Justice Department might drop the fraud case related to the 737 MAX.
That's the indication, yes. It seems they might be heading towards resolving that, potentially without pursuing the criminal fraud charge against the company itself.
How would the market likely react to that?
Oh, almost certainly positively for Boeing. Removing a major legal overhang like that? Well, it usually boosts investor confidence. You could see aerospace stocks react favorably to that kind of news.
Okay, so pulling it all together, it sounds like a landscape of, well, ongoing global economic uncertainty. There's this potential for inflation to creep back up, driven partly by energy.
Definitely.
And you've got shifting geopolitical factors influencing oil, trade policies still being discussed. It's complex.
It really is. It shows how, what consumers buy or don't buy in China can affect U.S. tech stocks.
Right.
And how EU policy decisions impact global energy prices, which then loop back to potentially affect U.S. inflation and Fed decisions. It's all interconnected.
Which leads us to the final thought, really, for you listening. How might all these different signals, from China's shoppers to EU sanctions to Fed hints, how might they, individually and together, influence your financial thinking or maybe the industries you watch closely in the next few weeks and months?
Yeah, it's definitely something to mull over, how these global currents might affect your part of the river, so to speak.